When you find the perfect home, did you know that the strength of your offer could depend on just two words? While both are important first steps, one carries significantly more weight when a seller is deciding whose offer to accept. Did you know the difference between these two words? Pre-qualified and pre-approved. So let's talk about it right now. Welcome back to our series on the basics of home buying. And in our last video, we talked about why your very first step, your socks and shoes step, is to talk to a lender. And today we're clearing up a point of confusion that I hear frequently from home buyers. And this usually happens right at the start. And they're wanting to know, what is the difference between being pre-qualified and being pre-approved, and which one should I have? And these terms get thrown around interchangeably. But in the eyes of a seller and a really good real estate agent, they are not the same thing. So let's break down which one you really need and why. First up is a pre-qualification, and think of this as just a quick, informal review. It's usually a very short conversation where you tell a lender your income, your debts, and your assets. And they don't verify this information. They just take your word for it. And because it's based primarily on the information you provided them, a pre-qualification letter only gives you a rough estimate of your true buying power. And though it's a great starting point to see if you're in the ballpark, it doesn't involve a deep dive into your specific financial situation. And without that verification, there may be hidden speed bumps that haven't been fleshed out yet. And these could be issues that catch you by surprise once you're deep into the financing process, and ultimately could cost you the home in the end if they're not able to be rectified. Now, a pre-approval is where things get more serious. This is a formal commitment from the lender. And to get this, the lender isn't just listening to what you say. They are going to verify it with documentation. They're going to pull your credit report and get your score, and they're going to ask for a paper trail of all of your financial situations. They are going to need the following documents. They're going to need a W-2. They're going to need tax returns for the past 2 years. They're going to need pay stubs. They're going to need bank statements and proof of identity. And they may need other documents if there is something that needs to be explained or corrected in your credit report. And it is always better to find out these things during the lender review for the pre-approval rather than when you are under contract and things are much more stressful. Once the lender reviews these documents, they will give you a specific loan amount that they are willing to lend you. And in today's market, a pre-approval letter is a competitive advantage over a pre-qualification. It signals to the seller that you aren't just a maybe, but that you are financially cleared to make a purchase and that you are ready to purchase. So if you're ready to take this step, but you don't know who to call, I can help. I have several fantastic lenders who are known for their awesome communication and are able to get my clients to the closing table smoothly. So just contact me directly or leave a comment below, and I'll be happy to provide you with a few lender recommendations to get you started. So thanks for watching. And if you found this video helpful, please give it a thumbs up and subscribe to the channel so you don't miss the next video in our series, where we're going to be talking about the extra cost or hidden cost of buying a home so that you aren't caught off guard. So stay tuned for that next video, and we'll see you then.